Welcome to my $100,000 stock experiment, year 2, week 46, ending February 28, 2020. This isn't an endorsement to purchase any stocks that I bought, nor an endorsement to purchase stocks in general. I'm on a mission to become a great growth stock investor. Watch me on my journey, learn from my mistakes, and celebrate my successes. If you follow the market at all, I'm sure that you heard the stock market went down substantially this week. The S&P 500 was down 11.5% for the week. Last week it closed at 3,337, and I had identified my line in the sand where I wanted it to stay above to be 3,345. So it closed last week slightly below that, and then this week it closed all the way down at 2954, and it had super high volume. This is a 5-day chart with 30-minute frequency. So you can see the S&P 500 on Monday, it dropped 3.4%, followed by Tuesday, it dropped 3%. On Wednesday, it pretty much held itself. It dropped 0.4%. Thursday, it dropped 4.4%. And then on Friday, it dropped 0.8%. The Russell 2000 was down 12% for the week. It hit the lowest point in 6 months, but it closed that day on Friday. It closed the third lowest in 6 months. Back at number 1 and 2, it had closed lower than it did on Friday, February 28th. The volatility index was 1708 on February 21st, and on Friday, February 28th, it closed at 40.11. It hit an astonishing 49.48 on Friday, but didn't close that high. The yellow lines down at the bottom are the area that I really want to see this volatility index in. I want it to be between 12 and 16. I had to go back to a 5-year chart to see volatility as high as 50. Number 1 is on August 24th, 2015. Not sure what happened that day, but something was up. It was also over 30 at number 2 and number 3 in February 2018 and December 2018. So last week's plan was I had a cash balance of about $45,000. I was going to sell anything that triggered a floor and look for stocks that I wanted to buy. And boy, did I sell. Everything went. I had 2 stocks, GPN and Tesla, that I had profits in, and the rest of them I took a loss. Typically, it takes me several weeks to get to a break-even point with my new purchases, so it doesn't come as a surprise that I took losses in most of my stocks since I held most of them for 3 weeks or less. This is the chart for Apple. The green solid line at the top shows my purchase price with that little box there. The orange box shows the day that I purchased it. The solid yellow line is my 8% floor. The dashed yellow line is when I raise my floor. The red is where I've sold it, unless I sold it at my dash yellow floor, and I'll explain that in a minute. And then the black dot above number 1, that corresponds to the date up in the top left-hand side. In this case, it happens to be the date that I sold the stock, so I just want to show you the price range for that day, so that's how I annotate most of my charts. So Apple, I held for 2.5 weeks, and it was down 8%. I took that 8% loss in this stock. This is a 5-day chart with 30 minutes frequency, and I wanted to show you that on Monday, this stock opened up below my floor of 305.14. I keep a very narrow sell range, so the stock needed to be between 305.14 and 304.94 in order to trigger a sell, and it opened below that. And so I canceled my order because I didn't want it to trigger on the way back up if the stock happened to pop back up. And then I manually just set my floor down at that 8%, and it sold. I don't want to use a stop order that turns into a market order because at number 1, you can see at the beginning of the day in the first 30 minutes of trading, this stock was between 304.18 and 289.23, and I didn't want to sell it all the way down at 289.23. I like to control what my sell price is when I can. FICO. I held this stock for just about 3 weeks and I had a loss of just about 6%. It did trigger my floor at that dotted yellow line, and that's where I sold it. It continued to fall for the next few days, but on Friday it popped back. So I wonder if this stock has hit bottom. GPN also triggered a floor. Last week I had a gain of 13%, and I exited this week with my gain of 10%. This is another stock I'm wondering if it has hit the bottom, because it did bounce back on Friday and it did close at the top of the range like FICO did. So I held this stock for 14 weeks and I exited, like I said, with a 10% gain. Netflix. I had 2 buys in this. I held one for 3 weeks and I had a 3% loss, and I held one for 1.5 weeks and I had a 5.6% loss. This is one of the stocks that triggered the floor, but if I had kept my floor at 8%, it would not have triggered. I'm not sure that I'm willing to take that 8% risk with all my stocks to save 1 or 2 stocks. This is another stock that's holding up nicely in this volatile time. Square. Another stock that's holding up well, triggered a floor at 6%. If I would have had my floor at 8%, this stock wouldn't have sold yet. It does have super long bars, which means that it has a really wide price swing each day. SGen triggered a floor for a 6% loss, and I had held this stock for just about 2 weeks. Tesla. I also held this stock for 2 weeks, and I exited with an 8.4% gain. Last week I had a 16.4% gain, but I'm happy with my 8% gain considering I could have done much worse. AMD. This stock opened below my floor, just like my Apple stock did on Monday, and I removed the floor because I didn't want it to trigger it on the way back up. I would have been better off if I left this because it did hit my floor on Tuesday, but I ended up selling where that red line is. So I held my B1 for 3 weeks and I lost 3%, and I held my B2 for 2 weeks and I lost 12%. I think that's my biggest loss of the year. I'll have to check that, but this one got away from me a little, especially on that B2. Build. With the volatile market, I did remove all my floors on Monday because I wanted to see how the market was reacting, and I shouldn't have done that. I did, and I have to live with that. So I did take a loss in this stock of about 6%. I held it just over 2 weeks. The benchmark shows that my portfolio went down about $6,400. Ouch. The value of the S&P 500 for the same experiment time period dropped around $14,400 for the week. I drew these 2 red lines to show how you can go back in time and see where that value of the portfolio was last. So the S&P 500, which is in the blue, lost 22 weeks worth of its value. The value of the $100,000 hadn't been that low for 22 weeks since October 4th, 2019. And the Melissa Method experiment lost about 10.5 weeks of value. I was last in that range between December 20th and December 27th, 2019. This spreadsheet is showing the weekly change in year-to-date value for the S&P 500 versus the Melissa Method portfolio. So the S&P 500 went down 11.5% this week versus the Melissa Method, which went down 4.3%. Year-to-date loss on the S&P 500 in the purple is 8.6% down, and the Melissa Method year-to-date is 2.5% down. My year 2, which started on April 13, 2019, has an 18.4% gain versus a 1.6% gain for the S&P 500 for the same time period. I've highlighted this in green. I started to wonder if I was using the right index for comparison. So I took a look at the Russell 1000, Russell 2000, S&P 500 index, the Dow Jones Industrial, and the NASDAQ. Down at number 1, this is showing the dates for the year 2 of the Melissa Method experiment from April 15, 2019 to February 28, 2020. The highest gain for this time period is the NASDAQ with a 7.4%. And the Melissa method has an 18.4% for the same time period. Then I looked at since the beginning of the Melissa method experiment, all the way back to April 13, 2018. The highest gain for this time period is the NASDAQ with a 20.6% gain, and the Melissa method has a 44.3% gain for the same time period. So I'm pretty happy with my performance. So my cash balance is over $144,000. I don't have any sells because I don't have any stocks. I'm going to look for signs of market recovery. I really don't expect to be buying this week, but I'm going to look for stocks that have high relative strength and stock with short bars with a narrow price range. When I say I'm going to look for signs of market recovery, I look to the past to see how the market dropped and what it looked like when it was recovering. This is a 5-year chart for the S&P 500. At number 1, back in August of 2015, we dropped 11% in 2 weeks, and then it stayed down for about 6 weeks before it started to recover. At number 2, January 2016, it went down about 13% in 3 weeks and stayed down for about 5 weeks, and then it had a nice run back up. It didn't have a big drop again until February 2018, where it went down almost 12% in 2 weeks, and it stayed down for 10 weeks, depending on how you count. At number 4, from September through the end of December 2018, it had a 20% drop that took about 3 months. But when it recovered, it went right back up, sort of a V shape there. And now at number 5, we have an 11.5% drop in 1 week. So we don't know what's going to happen. We'll just have to watch the charts and see how it develops. This is a 2-year chart for the Russell 2000. I'm wondering if the drop is going to be like August 2018 to January 2019 from number 1 to number 2, where it went down 27%, or more like blips 3, 4, and 5, where it went down just 10%. I find it scary that less than 18 months ago, on August 31st, 2018, we closed at 1740, and then 4 months later, on December 28th, 2018, we closed at 1266. On February 16th of this year, 2020, we were just about at 1740. Does that mean we're going to drop all the way down to 1266 again? Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel, The Melissa Method. Don't forget to hit the bell if you want an alert when I post a new episode.